It is 9:20 a.m. Pacific Daylight Time. It's the 13th day of October 2025, and this is episode 1188 of Bitcoin. And it's not quite a palindrome, but that'll do, pig, that'll do. Okay, so what's going on for today? Because this is where you come for all the news that you can use about Bitcoin and more. Going to talk about the Nobel Peace Prize. It seems that a Bitcoiner may have won it. I don't know. There's some confusion on this headline, but we'll suss it out. Don't worry. And then we're going to do a relatively deep dive into the massive liquidations that occurred over Friday and Saturday. It was ugly. Everybody got hurt. Trillions were wiped out across all markets. So everything was affected except for gold. Gold apparently did okay, but everything else was affected. I mean, energy, equities, everything just tanked. And it seems to have all been due to possibly, there's a rumor that this is possibly all due to a misinterpretation of language between both Trump and President Xi in China. But I'm more interested in the wipeout that occurred clearly in Bitcoin. And there was something very unusual about that. And I didn't say it Friday when I was doing the show because I didn't realize the extent that we were going to dive down. I think I foolishly said that we'd see 17.5. We did, on its way down to 102. I think somebody has actually said that one of the exchanges saw a price of 102. I know somebody got a order filled at 104,000, so I know at least it got there on an exchange. But that's what I want to focus on, is what happened and this unusual activity that occurred right before Trump made his Truth Social post, which started the cascade failure across equities and all legacy markets, and then took Bitcoin and the rest of it with it. And let's see here. What else is going on today? Oh, V30, Bitcoin Core V30 was released on Friday as well. And so we're going to dig into that. No, it was not the release of Bitcoin V30 that caused the liquidation. This was all about Trump and the tariffs. And honestly, I actually think that it was kind of good. Well, okay, I'm being relative here. In a relative way, I'm glad that the release of V30 was completely overshadowed by the carnage going on in the markets. I'm not excited about V30. I'm running 29. That's going to be the last core update that I do to my Bitcoin core node until all these people settle down and figure out a better path forward. And I don't really need to run 30. I don't need to run the new Bitcoin Core software. And even if there was nothing in V30 that was questionable, I still would wait 6 months, if not even a whole year, to upgrade. Hell, it's taken me a year to upgrade from 28 to 29. Well, somewhere around a year, I guess. Whatever year 28 was released in, I upgraded like after that, and then now I've upgraded to 29. That's it. I'm done for a good long while, and that's the beauty of the Bitcoin network. I literally would be able to run 25 if I wanted to. Sure, I wouldn't have some lights, whistles, and bells, but I can run it, and I would be able to execute valid transactions on the network with 25, and I'd be able to execute valid transactions on the Bitcoin network from a long time ago, because that's the way that this stuff is built, right? So for all the people that are pulling their hair out over version 30, it's not worth your time. Just stop worrying about it. It is not worth you worrying about. And then, is there a pardon in the works for Changpeng Zhao, founder of Binance? I don't know exactly why he would need one, because from what I understand, he's not in jail. I don't know. Maybe I got that wrong, and we'll figure it out later. India is getting some people into trouble through tax evasion charges and calls. Steak and Shake does something stupid and Strategy buys more Bitcoin, but they did so at a price that they probably wish that they hadn't have done. They should have waited, I guess. All right, so Peace Prize. Nobel Peace Prize has been awarded to Maria Corina Machado. Could she become the first Bitcoin Nobel winner? And there's where I'm having some confusion. I don't really know what this headline is trying to say, but it's written by Micah Zimmerman, as is the rest of the piece, found in Bitcoin Magazine. Venezuelan opposition leader Maria Corina Machado has been awarded the 2025 Nobel Peace Prize, recognized for what the Norwegian Nobel Committee called her, quote, tireless work promoting democratic rights for the people of Venezuela. But for many in the Bitcoin community, the win carries another layer of meaning because Machado isn't just a democracy activist. She's also one of the few but growing global political figures who has openly embraced Bitcoin as a tool of resistance against authoritarianism. The Nobel Committee described Machado, who is 58 years old, as a woman who keeps the flame of democracy going against a growing darkness, end quote. It's a description that fits not just her fight against the current regime, but her larger vision of how technology and decentralized money can empower citizens when governments fail them. And she does not look like she's 58 years old. If she's 58 years old, then she has taken marvelous care of herself. I'm just saying. I'm in shock, Machado said after the announcement. I am just one person. I certainly do not deserve this. I dedicate this prize to the suffering people of Venezuela and to President Trump for his decisive support of our cause, she wrote on X. Well, that's an interesting shout out. I was not expecting that one. Machado's political story is one of persistence under threat. Barred from running in last year's presidential election, which international observers widely dismissed as rigged, she was forced into hiding but refused to leave Venezuela. The Nobel Committee praised her as a key unifying figure in a brutal authoritarian state that is now suffering a humanitarian and economic crisis. That crisis is something Machado has long tried to explain in global forums. Venezuela's economic collapse, she argues, was not an accident, but a predictable outcome of financial repression and the state control of money. And it's here that her views intersect directly with Bitcoin. In an interview first aired by Bitcoin Magazine last year, Machado spoke at length about Venezuela's economic collapse and the role Bitcoin has played in helping citizens survive it. Quote, the Venezuelan bolivar has lost 14 zeros, she said, recalling how inflation once hit 1.7 million%. Quote, this financial repression, rooted in state-sponsored looting, theft, and unchecked money printing, has destroyed our economy despite our vast oil wealth, end quote. For many Venezuelans, Bitcoin became the only alternative. It has allowed families to store value outside the collapsing bolivar, receive remittances without confiscation, and even fund their escapes from the country. Machado called Bitcoin a lifeline for Venezuelans, a way to bypass government-controlled exchange rate. She proposed including Bitcoin in Venezuela's future national reserves as the country seeks to recover its stolen wealth and rebuild from the dictatorship. Machado also proposed including Bitcoin in Venezuela's future national reserves as part of the country's post-dictatorship recovery. Quote, we envision Bitcoin as part of our national reserves, helping rebuild what the dictatorship stole, she told Bitcoin Magazine. Machado's emphasis on transparency echoes one of Bitcoin's core principles, a public ledger that is incorruptible by design. It's an idea that resonates with freedom and justice. Okay, well, so it so happens that she talks about Bitcoin in a positive light. It so happens that she's suggesting that the country of Venezuela include Bitcoin in a strategic national reserve of some sort or another. But she was not, and this is just me trying to be clear, She was not given the Nobel Prize because she's a Bitcoiner. She was given a Nobel Prize for her work as an activist defending the citizenry of Venezuela and trying to promote the ideals that's going to make that country great. This had nothing to do with her being a Bitcoiner. So for anybody who's promulgating that idea out there, please don't listen to them. And for God's sakes, don't take it any further. All right. She was given a Nobel Peace Prize for something completely unrelated to Bitcoin. It so happens, and this is the good part, that her ideals completely resonate with Bitcoin, which is why she is also gravitating towards that. She sees it as the freedom tool that it is. But again, that was not why she was given the Nobel Prize. So she didn't get the Nobel Prize because she is a Bitcoiner. I just want to be clear about that. But it's good news. I mean, it's honestly, it's good news because that story is now going to resonate across the world, considering that, well, I mean, it's a Nobel Peace Prize. And you can say what you want about the Nobel Foundation and all that. And you know, maybe it's a little captive, maybe not. I don't know. But, you know, they've made some questionable calls. I'll say it. But sometimes they make the right call. And honestly, I think they probably gave the Peace Prize to the right person this time. So now it's time to talk about the massive liquidations. And it seems as if they may have been underreported. So Adrian Zmunsky from Cointelegraph is writing this: centralized exchanges face claims of massive liquidation undercounts. Hyperliquid. And keep Hyperliquid in mind because we're going to talk about them a couple more times. Hyperliquid co-founder and CEO Jeff Yan claimed that the way centralized crypto exchanges and Binance specifically report liquidation data likely underrepresents the true scale of losses during major market sell-offs. Bitcoin fell to $102,000 on Friday after United States President Donald Trump announced sweeping tariffs on China, and then they give the prices of a couple of shitcoins. According to data from CoinGlass, $16.7 billion, that's with a B, billion dollars worth of long positions and $2.46 billion in short positions were liquidated on Friday, marking the largest liquidation event in crypto history. If you were not aware, Friday marked the largest liquidation event in cryptocurrency ever. In a Monday X post, Jan pointed to a documentation page on the world's top crypto exchange Binance, explaining that the platform will only include the latest liquidation happening in each second interval in the order snapshot stream. The stream provides real-time updates on forced liquidations, while batching liquidations this way helps performance. Jan said that the system likely results in major underreporting during periods of heavy volatility when there can be more than 100 liquidations per pair per second. Quote, because liquidations happen in bursts, this could easily be 100x underreporting under some conditions, Jan wrote. Jan's statement echoed a Saturday X post from crypto platform CoinDesk. The platform said that, quote, the actual liquidated amount was likely much higher since Binance only reports one liquidation order per second. Jan's comments follow over 1,000 hyperliquid wallets being completely wiped out in the market crash on Friday. According to Look On Chain data, over 6,300 wallets are in the red, with combined losses exceeding $1.23 billion. Centralized crypto trading platforms run into numerous issues during the flash crash, or ran into numerous issues. The world's top crypto exchange, Binance in particular, has attracted considerable criticism over multiple reported issues. In a Sunday X post, Binance CEO Yi He said Binance's core contract and spot matching engines, as well as API trading, remained stable throughout the event. She admitted, however, that, quote, some individual functional modules of the platform did experience brief lags and certain wealth management products experienced some depegging, end quote. Yeah, still, she claimed that depegging events did not cause the market crash and that the peg happened because of and after the downturn itself. She also said that Binance initiated and completed compensation for users affected by the depegging, which amounted to over $280 million. Widespread reports indicate that the price of some major altcoins reached $0 on Binance at the time of the mass liquidation event. Pseudonymous crypto influencer Hanzo shared his experience during the downtime. Quote, on Binance, buttons stopped working. Stop orders froze. Limit orders hung. Only liquidations were executed perfectly. Binance later said that the anomaly was a display issue caused by changes to minimum price decimals for pairs such as IOTX USDT and not actual market data. Quote, certain trading pairs, such as the two aforementioned, recently reduced the number of decimal places allowed for minimum price movement, causing the displayed prices in the user interface to be zero, which is a display issue and not due to an actual price of $0, end quote. The Athena USD stablecoin maintained its peg on the decentralized finance protocol Curve, but it went severely off peg on Binance and competing exchange Bybit. In a Saturday X post, Hasib Quarshi, a managing partner at crypto venture capital fund Dragonfly, pointed out that the USDE hit 95 cents on Bybit and well under 70 cents on Binance, but did not lose its peg on Curve. Oh, well, Guy Young, the founder of Athena Labs, said that USDE minting and redeeming worked perfectly during Friday's flash crash. Data he shared showed that $2 billion in USDE was redeemed during 24 hours across crypto exchanges, including Curve, Fluid, and Uniswap. Tom Cohen, head of investment and trading at quantitative crypto asset management firm Algos, told Cointelegraph that, quote, the start can be traced to roughly $60 to $90 billion of USDE simultaneously dumped onto Binance to exploit a mispricing, and this triggered a series of large sell-offs. This sell-off, he said, moved thinly traded markets very quickly. Hyperliquid also pat itself on the back following the reported centralized exchange outages. The platform wrote in a Saturday X post that, quote, during the recent market volatility, the Hyperliquid blockchain had zero downtime or latency issues despite record traffic and volumes. This was an important stress test proving that Hyperliquid's decentralized and fully on-chain financial system can be robust and scalable. So the extent of the liquidations may actually not be as may be worse. And will we know? Oh, I'm sure eventually some sleuths out there will figure it all out. I still haven't seen an updated number, but it still is. Even if it's underreported. Friday was the largest liquidation event in the history of this entire industry. So just be careful out there. You know what to do, man. Just buy Bitcoin and hold Bitcoin. But despite all this, despite the Friday crash, crypto investment products logged a $3.17 billion of weekly inflows despite historic liquidation event, according to CoinShares, and this is from James Hunt, writing for The Block. Global crypto investment products managed by asset managers such as BlackRock, Bitwise, Fidelity, Grayscale, ProShares, and 21 Shares generated net inflows of $3.17 billion last week, according to CoinShares. And as a result, year-to-date inflows have now surpassed last year's record tally, totaling $48.7 billion so far in 2025, notwithstanding the chaotic end to last week when cascading liquidations wiped billions of dollars in value from the crypto sector. Quote, despite the significant price correction caused by the China tariff threat by the U.S., Friday actually saw little reaction, with a paltry $159 million of outflows, CoinShares head of research James Butterfield wrote. Weekly trading volumes in digital asset exchange-traded fund products, or rather just exchange-traded products, also surged to a record $53 billion, while Friday alone saw an all-time high of $15.3 billion in daily turnover. However, following President Trump's tariff announcement, total assets under management slipped only 7% from last week's peak of $242 billion, though James Butterfield's comments were later walked back to, well, some extent. At least $20 billion of positions were wiped out on Friday as some cryptocurrencies briefly fell literally to zero, the largest crypto liquidation event in history in US dollar terms. However, as liquidation data is imperfect, with Bybit publishing in full, but Binance and OKX still underreporting in incomplete bursts, for example, the true figure is likely far higher. But the real point about this story is that even though Friday was a bloodbath across markets, somehow the crypto investment products ended the week $3.17 billion in the black. So this is a very confusing time for everybody. All right. So don't, if you are somebody who doesn't trade because it's confusing, that's fine. Stay that way. Don't trade, man. There is no reason to go to this casino. The girls aren't that pretty. The drinks are watered down. The carpet's got stains on it. You don't want anything to do with this casino. Just please, because you're betting against people like this. Unusual Whales on Twitter threw up a Twitter post that says, breaking, look at this. A new crypto account was opened yesterday morning. 30 minutes before Trump's announcement of 100% tariffs on China, it added a huge multi-million-dollar leveraged Bitcoin short position. The market dumped. The trader made a profit of $192 million in 2 hours. Unusual. No, it's not. It's not unusual at all. And I'm going to let Shara Malwa tell you more about it from CoinDesk. Trader who made $192 million shorting crypto cash is betting against Bitcoin again. So there's another short that's been opened. So just be aware. A trader who pocketed $192 million shorting Bitcoin ahead of last week's crypto wipeout has reloaded with a large bearish position as markets attempt to recover from the Trump tariff shock. The wallet, identified as OXB317 on the decentralized derivatives platform Hyperliquid, remember we were just talking about that, opened a new $163 million short position on Bitcoin late Sunday, data from Hyperscan shows. The position is 10x leveraged and already $3.5 million in profit in Asian afternoon hours with a liquidation level of $125,500. So the only way this dude gets wiped out is if the price of Bitcoin goes to $125,500. That's kind of what that means. Anyway, the same trader, now here, listen up. The same trader first drew attention on Friday when it opened a massive short roughly 30 minutes before former President Donald Trump's surprise announcement. Why they call him former President Trump? He's the actual president. He was also the former president. That's weird language. I don't know, man. Smelling some bias there. But let's try it again. The same trader first drew attention on Friday when it opened a massive short roughly 30 minutes before former President Donald Trump's surprise announcement of 100% tariffs on Chinese imports. A move that erased over $19 billion in crypto market value and triggered the largest ever day of liquidations in the market. The, again, listen carefully, the perfectly timed bet led to a gain of nearly $200 million, sparking speculation that the entity may have had advanced knowledge of the policy shift. No, I'm shocked that there's gambling going on in here. On-chain analysts and traders have since dubbed the address an insider whale. Some even argue that the position itself could have accelerated the crash. This hyper-liquid whale opened shorts just 30 minutes before Trump announced the tariffs on China. He closed the trades for $192 million in profit. These accounts were open today, and he has already withdrawn most of the money. Lucky whale or insider, and that was a tweet from, I don't know, Marty Party Music? It's hard to tell. Anyway, continuing, Hyperliquid is the biggest decentralized perpetuals exchange that lets traders open high-leverage futures positions directly on-chain without relying on centralized intermediaries like Binance or OKX. It has become a favorite among high-frequency traders and whales because of its deep liquidity, transparent order book, and lightning-fast execution, making it one of the few DeFi platforms capable of handling institutional-size flow. The platform also features auto-deleveraging, or a built-in safety mechanism that prevents bad debt during extreme volatility. When insurance funds are drained, ADL forcibly closes profitable positions to cover losses from bankrupt accounts. It ensures solvency, but it can also worsen sell-offs as profitable traders get liquidated to balance the system. Over 6,000 wallets were hit during the weekend's ADL-triggered flush, according to the Hypertracker data, wiping out more than $1.2 billion in trader capital on Hyperliquid alone. The new short adds intrigue to the market already on edge as participants continue to assess contagion effects following the weekend slide. Look, man, at 125,500, this cat really doesn't have much to worry about, at least in the short term, right? And even if we continuously build to the position of like maybe 122, 123, something like that, at this point, this guy's got almost nothing to lose. Unless we hit 125.5, because he's got 10x leverage on this, $163 million short. And if he's 10x, then he's, it's going to be painful. But he already made $200 million. I didn't think this would just be, this is just him like going, no, man, maybe I can get some icing on my cake for this one. But honestly, if this particular trader plays it right, it's not going to be all that painful. Unless 125.5 hits. And like I said, I don't see that coming in the short term. But it makes me feel dirty, which is why I'm glad I'm buddies with SoapMiner at SoapMiner.com. Are your hands dirty? Is your soul dirty? Is your mind dirty? Are you like nose deep into things that smell bad, like crypto trading? Well, SoapMiner is going to help you out. Handmade tallow soap with 100% beef tallow. In fact, let's just look at his basic soap. It's called Rough Cut Tallow Soap. It's a 5-ounce bar of the finest rough cut tallow soap you can get. And it's made with 100% pure grass-fed beef tallow, lye, which is sodium hydroxide, and distilled water. That's what goes in to SoapMiner soap at the base. But then he'll put scents in like cedarwood, pine tar. Pine tar actually has some pine tar in it, I believe. Let's see, where is it? Let's see. Made with 100% pure, 100% beef tallow, 100% pure pine tar, and lye and distilled water. This is the most simple hand soap you're ever going to find. He's got goat's milk tallow, he's got lemongrass, he's got orange clove, he's got lavender, he's got tea tree, peppermint, Earl Grey, which is one of my favorite ones, and redacted tallow because it's got carbon in it. I love this soap. It's like it is like literally one of my favorite soaps from him, and I have yet to try his Comfrey soap. And if you're like digging in the garden, if you're a gardener, if you get like cuts and scratches and like little bitty kind of wounds and stuff, and bee stings, you're going to want to have a bar of Comfrey Tallow soap. Make sure that you use the code Bitcoin and for 10% off at SoapMiner.com. That's SoapMiner.com. Let them know Bitcoin and sent you. Now, on to the last story of this half. We're going back to Hyperliquid. I told you we were going to be taking a little bit of a deep dive. Remember, we were just talking about what Hyperliquid is. It's this DeFi exchange that offers all these lights, whistles, and bells, and is the only thing, apparently, according to the last story we read, that is capable of institutional-sized flow. Well, I've found it interesting that I've got this out of the block. Timmy Shin is writing it. Hyperliquid to activate HIP-3 upgrade, enabling permissionless perpetual market creation. Oh joy. Now we can just create a market out of thin air. Hyperliquid is expected to activate HIP-3, a major protocol upgrade that will enable the permissionless creation of perpetual futures markets later today. A Hyperliquid administrator announced in the protocol's Discord channel that the network upgrade on October the 13th will include enabling HIP-3. Quote, HIP-3 will be enabled during this network upgrade. There is no immediate change for users. Deployers meeting the on-chain requirements will be able to deploy perpetuals for trading once they are ready, said the administrator. End quote. The project said in a previously disclosed document that HIP-3 will support builder-deployed perpetuals, marking, quote, a key milestone toward fully decentralizing the perpetual listing process, end quote. With HIP-3 in place, the deployers will be able to permissionlessly launch a perpetual decentralized exchange on Hypercore by staking some shitcoin, integrated with Hyper EVM for smart contracts and governance. HIP-3 includes safeguards like validator slashing and open interest caps, according to the document. So this just screams danger. Danger, Will Robinson, danger. I'm serious, man. It's this kind of crap that makes this casino the filthy, stinky, crappy mess that it is. Why people are so attracted to this kind of gambling has always eluded me. But then again, I don't even bet on games. I don't bet on football or baseball or basketball. I don't have a sports bookie. You know, I have zero interest in going to Vegas and playing cards or rolling dice or getting on a roulette wheel. It's just, I'd rather take that money and put it in a brown paper bag and burn it for warmth before I would go gamble it. This kind of crap, it's almost as if I could have an AI agent spin up a perpetuals market, bet on it, and lose on it and win on it and have liquidations across the board and cause cascading liquidations all in my sleep. And at that point, you got to ask yourself, what's the point? It's all stupid. Let's run the numbers. CNBC futures and commodities. Brent North Sea oil up a point to $63.40. West Texas Intermediate up 1.19% to $59.60. So we're still below 60 on that one. Natural gas is up 0.13. Gasoline is up 1 1/4, and Merbon crude is up 1 1/3. And of course, all your shiny metal rocks are doing extremely well today. Palladium is up 4 1/4. Gold is up 3.12 to smash through $4,100 to end up right now at $4,125.70 per troy ounce. Yes, Peter Schiff is going to take a victory lap. That's okay. Let him go. He's been waiting for a long time for this, okay? Just let him have his thing. Platinum is up 4.13%. Silver is up 6.7%. Cruising through $50.43 per ounce. Copper is up 5 1/4, and ag is fully mixed. Just as much green as there is red. Biggest winner today, Coffee up 3, biggest loser is sugar, 3.23% to the downside. Live cattle is up, 0.7%. Lean hogs are up 1.2%, and feeder cattle up 0.12%. S&P is up 1.5. NASDAQ is up 2 full points. Not a bad recovery for the legacy markets. Dow is up 1.3%. That is a 596 gain on that particular board. And S&P Mini is up 1.99%. So the recovery is underway, y'all. It's going to be fine. Meanwhile, Bitcoin at $114,760. We're clearly being left out of the fun. We could only purchase 27.8 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,933,816.79 of, and average fees per block are low, 0.02 BTC, taken in fees on a per block basis. Looks to be about 20 blocks carrying 40,000 unconfirmed transactions waiting to clear at high priorities of 4 Satoshis per VByte. Low priority gets you in at 1. We are still in zettahash territory on the hash rate, 1.03 zettahashes per second. It's all the security I need. And from, oh man, it never loaded up. Really? Let's see if I can get these comments to load up from fountain.fm. It's being buggy today for some reason or another. And you know what? This may just not work. I'll give it one more shot here and see if it'll actually spin up. Come on, you can do it. You can do it. There is something very wrong with fountain.fm, so I am unable to get to any of the boosts that you guys gave me. So I will hold those over until Fountain gets their little red wagon fixed. That's the weather report. Welcome to part 2 of the news that you can use. Bitcoin Core V30 is here. The op return issue splits the community. And this is from atlas21.com. The Bitcoin community finds itself divided again after the official launch of the Bitcoin Core V30 update. The release, which introduces changes to node architecture, performance, and security, has sparked mixed reactions among developers, miners, and users. The key updates. The Bitcoin Core development team has implemented several new features designed to enhance the user experience on the network. One notable addition is optional encrypted node-to-node connections aimed at ensuring greater privacy for users. The official announcement on October the 12th also clarified that with the release of this new major version, all versions prior to 27.x have reached end of life and will no longer receive security or maintenance updates. Oh, dude, got to pause right there to say bad move. That's not depressing. It's unfortunate is what this is. Because it's like, the more that Core makes moves like this, the more I'm not going to run. Look, I'm not going to run knots, and I don't really want to engage in this kind of chicanery here, or talking. Well, not chicanery, talking bad behind Core's back, because Core. That's why Bitcoin is what it is. So when I read stuff like this, it makes it all the harder, because I'm becoming a little bit more and more disappointed with Bitcoin Core as a group of developers. I feel that they may have lost their way. And yet I am still unaffected emotionally by does that mean it's the end of Bitcoin? No, of course not. I mean, that's not the way Bitcoin actually works. All right. I feel absolutely nothing about this. Absolutely nothing. But continuing on, one of the other main changes is the reduction of default transaction fees. Nodes can relay transactions with fees as low as 0.1 sat per VByte, while miners will be able to include them in the next block with a minimum fee of 0.001 sats per VByte. The most hotly debated chain, however, concerns the expansion of the op return limit, which is increased from about 80 bytes to 100,000 bytes. Holy shit. This adjustment allows for much larger amounts of non-financial data to be stored within Bitcoin transactions. Although the update also includes bug fixes and performance improvements, it is the op return limit increase that has captured most of the attention and divided the community. What are the reactions? Well, Alex Bergeron, ecosystem lead at Arc Labs, expressed excitement about Bitcoin Core V30 on X, stating his intention to use all of the additional op return space and will use it to make Bitcoin more like Ethereum, except better. Oh, joy. Pavel Rusnak, co-founder of Satoshi Labs, said he chose Bitcoin Core V30 for its great development team, peer-reviewed code, and sane engineering decisions, end quote. Critics of the update argue that this change violates Bitcoin's core principles as a peer-to-peer electronic cash system. Concerns include the potential growth of the blockchain size, higher operational costs for nodes, and legal risks. Last week, Nick Szabo, a well-known cypherpunk, recommended on X, quote, as a hopefully temporary measure, run NOTs. I strongly recommend not upgrading to Core V30. Dude, you can upgrade to V28 if you're on like below 27, right? Which they've said they're not. Core said we're not gonna do security updates for any of that crap anymore. Then go to 28 or go to 29 or go to 29.1. You don't have to do 30, right? So everybody should be a little bit more careful about this. Anyway, earlier in October, Szabo had already raised concerns about the legal implications of increasing the op return limit. According to him, node operators risk hosting illegal data for which they could be held criminally liable. In recent months, in response to Bitcoin Core's decisions, a significant number of node operators have adopted the alternative implementation Bitcoin NOTs, which allows for strict data size limits to be applied. Data from Clark Moody Bitcoin shows that there are currently nearly 5,000 active NOTs nodes, representing about 20% of all nodes. So if the argument here is that increasing the byte size of op return from 80 bytes, which is very low indeed, not a whole lot of information can be stored in 80 bytes of data, to 100,000 bytes of data. And at that point, you can store data. I mean, it's not massive, but still, yeah, you can put a picture in there. And the argument is that immediately pictures of child porn are going to be put on the blockchain. That's the general argument. And because my node will be hosting that CSAM, then I'm criminally liable for it. Except I can't ever really see that because my node software doesn't allow me to look at pictures. It will tell me things about the blocks. It'll tell me things about transactions. It will tell me other things, but it doesn't have a picture viewer as part of its onboard complement. I would have to do first of all, I'd have to know the block number and I would have to know the transaction ID, right? Actually, I really wouldn't have to know the block number, but I would have to know the transaction ID to be able to identify which of the hundreds of millions of transactions that I want to go decode a picture from. And then I got to scrape that data and then I got to send it to a view. I don't care. I don't care. Okay. So here's the other thing is like, we're getting to a point where, and this has always been an argument where many people have said a long time ago that for node runners like me that just have a very small server, with like minimal compute power, although my Start 9 is actually pretty beefy when you get right down to it. But they're talking about like later on, as block size grows and that compute power is enough and the memory storage isn't enough, that maybe we can just go to looking at block header data, which is perfectly viable, right? It would not actually represent a full accounting of every single transaction because you would need all the transaction data for every transaction, and all we would have would be the headers that said, yes, at the time, this was a valid, and you can already do that. It's called a pruned node, right? And from that standpoint, it just doesn't include a whole bunch of transactions from way, way, way back in time. Mine is a full archive, right? I've got the Genesis block and all the transaction that was included in the Genesis block, and every transaction since. I've got it on my node. I've got every piece of data that's ever been generated by the Bitcoin network since January 3rd, 2009. That's the way that it works. But there's another way to do this where you can just hold the headers, because we already know that these transactions were valid. They've been revalidated millions of times. There's always a full audit. Every 10 minutes, the whole blockchain gets audited. And for everybody that does an initial blockchain download, the computer that's running, or the processing unit that's running that node, has to actually revalidate all of the transactions. It doesn't remind them, it just revalidates them to make sure that, yes, this transaction comes after this transaction, and you can tell all that just through the header data. You don't need to rifle through every single bit and byte of every transaction. So if that were to occur, if that was a switch that I could throw right now, I might consider doing it, because that means that this evil child porn shit that everybody is fictionally thinking that is going to automatically be stuffed into the Bitcoin blockchain, it wouldn't be present on my node. Guys, there's fixes. There's so many ways to skin a particular cat that everybody that's losing their mind about all this right now, you're just wasting your energy. It's not worth it. It really is not worth it. So let's move on. Is a presidential pardon in the works for Binance founder CZ? Josh Quintner has this one for Decrypt. Is the Trump administration seriously weighing a pardon for Binance's Changpeng Zhao? Crypto Twitter is all aflutter after Fox Business reporter Charles Garspino tweeted a scoop claiming White House insiders say discussions are heating up and Trump is leaning toward a pardon. Gasparino is a veteran financial and political journalist. His tweet lands atop a complex backdrop in May. CZ confirmed that his legal team formally applied for clemency. In earlier reports, the Trump family was said to have explored investment deals involving Binance's U.S. arm, linking business incentives to political favors. Zhao denied that speculation. CZ and Binance have previously denied that a pardon has been granted. Media reports of a pardon allegedly issued were retracted, and Binance's founder, Yi He, dismissed the rumors. DOJ records show no official clemency in his name. Still, the path from rumor to pardon isn't closed. If a clemency is issued, then it could ease regulatory constraints on Zhao's future involvement in crypto, rewire power dynamics at Binance, and reintroduce political entanglements in U.S. crypto legislation. And Zhao did not deny Gasparino's report. In fact, he welcomed the outcome. Quote, "Thank you, Charles. Great news if true," Zhao wrote while correcting a detail from his post, before thanking the journalist, quote, "for the coverage." CZ resigned his position as Binance's CEO in 2023 as part of a plea bargain that sent him to jail for 4 months at a minimum security prison in Lompoc, California. As part of the deal, he was allowed to maintain his ownership stake in Binance, but could no longer hold an executive role at the exchange. He remains Binance's largest shareholder and one of crypto's most influential figures. And since his return from jail, he's focused on global crypto advocacy, advising governments on digital asset policy, and investing in blockchain startups through private ventures. He founded Binance in July of 2017 following an initial coin offering that raised a paltry $15 million. God, he's been around for a long time. Is there going to be a pardon? Who knows? I kind of don't care. But Indians will be caring about this. In India, over 400 traders are investigated for tax evasion through Binance. Continuing with little Binance thread here, Atlas 21 has this one. India's tax authorities have opened a wide-reaching probe into more than 400 wealthy individuals suspected of avoiding taxes on crypto transactions conducted through Binance. According to the Economic Times, the inquiry focuses on traders who operated on the platform between 2022 and 2025. The Central Board of Direct Taxes has issued an internal notice to local tax departments across several cities requesting a detailed report on actions taken by October the 17th. The investigation covers the fiscal years from 2022 through 2023 and 2024 through 2025, during which the traders in question allegedly bypassed tax regulations, and the probe goes beyond standard exchange activity, also examining peer-to-peer transactions facilitated by the platform in India and settled through domestic bank accounts, Google Pay, or cash. India's tax system for cryptocurrencies is among the most burdensome in the world. Market participants face a 1% tax deducted at source on every transaction, coupled with a 30% tax on profits. And for top income taxpayers, the effective tax rate can reach 42.7%. I just want half of your money. Just give me half. When including surcharges and the 4% cess, I don't know what SESS means, an additional levy used to fund targeted programs such as education and healthcare. Cess. I've never seen that used before. Anyway, the government's stance toward digital assets remains focused on strict control and taxation. Union Minister Goyal recently reiterated the administration's intention to intensify efforts on developing a CBDC while maintaining high tax rates on cryptocurrencies. Yeah, that's not going to work. I don't think India is ever going to be able to get a CBDC. I wouldn't hold my breath on that one, and thank God for the people of India. Although it's not like it's not just as terrible as it can be. I mean, I remember when they recalled the 100 rupee notes, and people were standing outside their banks forever to try to get the newly issued paper currency in India, and it was an absolute fiasco. And I do believe people died because I think it was like in the middle of the hottest part of the year in India, and it was brutal. But not like this kind of brutality. Steak and Shake feels the ire of the Bitcoiner. Steak and Shake quickly U-turns as Ether poll angers Bitcoiners. Ooh, we're so angry. Braden Lindria, Cointelegraph. Steak and Shake has reversed course on a potential plan to accept Ether payments after several Bitcoiners balked at the idea of the fast food chain expanding beyond Bitcoin. Steak and Shake asked its 468,000 X-followers whether it should accept Ether on Saturday, promising to abide by the result of the poll. The poll saw 53% of voters say yes, but the fast food chain suspended it around 4 hours later due to backlash. Quote, "Poll suspended. Our allegiance is with Bitcoiners. You have spoken. Who even allowed this? I'm back at my desk. Steak Toshi." Whatever. Okay, fine. Steak and Shake started accepting Bitcoin as payments on May the 16th in all of its locations where permitted by law, including the US, France, Monaco, and Spain. It's odd. I'm just pausing to say that I find it very odd that Steak and Shake has restaurants in Monaco. France and Spain I can almost see, but Monaco? Okay, in the third quarter, Steak and Shake announced its same-store sales rose by 15% year-on-year, partially attributing the rise to Bitcoiners supporting the chain. So it made sense, as several Bitcoiners criticized Steak and Shake for even considering expanding its crypto payment options beyond Bitcoin. Quote, "I promise, if you accept ETH, I will never eat at your restaurant again," said Adam Simica, builder of Bitcoin self-custody wallet Mana. Quote, "The fact that you even created the ETH poll is disappointing," added a user named Colleen, also known as the Bitcoin Gal, while Bitcoin developer Carmen was one of the many who said the poll harmed Steak and Shake's reputation. And then Ben Justman, our favorite circle peer with Peony Lane Wine or Peony Lane Vineyard, says, Would you destroy your credibility and no one would even pay an ETH? Sad to see. As a reminder that Bitcoin and crypto tribalism remains alive and well. Many Bitcoiners view Bitcoin as the best form of money. Michael Saylor once famously said, there is no second best crypto asset. There's crypto assets, and there's only one crypto asset, and it's called Bitcoin, end quote. While some criticized Steak and Shake's quick change of heart, interestingly, the decision was praised by one of the biggest names in the Ethereum community, Vitalik Buterin himself, who suggested that crypto adopting businesses should stick to a crypto tribe instead of trying to appeal to as many customers as possible. Quote, we need the stubborn ones who believe in their cause and their tribe and see their work as a labor of love to it, end quote. Last week, Steak and Shake also announced that it is launching the Bitcoin Steak Burger on October the 16th to celebrate the company's adoption of Bitcoin. I missed that announcement. I don't know what that's about, but it took mere months. It was just back in like what, in May? Was it May 16th? Yeah. May, March, April, May, June. Yeah. It was back in May that they started taking Bitcoin, and it took mere months for them to start considering a alternative cryptocurrency. And this just goes to show why it's so difficult in this field. There's so much noise that's been introduced since the release of Bitcoin. Just a bunch of screaming, diaper-wearing morons going, me too, me too. We're better than Bitcoin. We're Bitcoin 2.0. Remember how there was Betamax and VHS? Yeah, and all the other arguments. And it's all crap. It's all crap. So Steak and Shake is no different than almost everybody else in this field. Maybe we should consider an alternative cryptocurrency as well. No, don't. Stop. Honestly, the whole reason we're not where we should be is because of all the Me Too's out there. It is what it is. Just ignore the noise if you can. And finally, for the day, Strategy added 220 Bitcoin for $27.2 million last week, right as Bitcoin was posting new highs. Michael Saylor's Strategy acquired 220 Bitcoin for $27.2 million in its latest purchase. Saylor announced on X on a post on Monday, as the related filing had yet to appear on the U.S. Securities and Exchange Commission website. The purchase was made at an average price of $123,561 per coin, as Bitcoin reached an all-time high above 126,200 October the 6th, before dipping to 107,000 in Friday's flash crash, according to Coinbase data. God, talk about ill-timed. So, but Saylor still bought Bitcoin, but although he should have done it last week, or the week before last. That was the week that he didn't buy Bitcoin, and he should have bought Bitcoin that week because he'd probably still be okay at this point, but he's down quite a bit on this particular purchase. It doesn't matter. His liquidation price is so low at this point, it's not even funny. I don't even worry about it anymore. The only thing that I worry about is, will Saylor pull a Steak and Shake and start talking about some shitcoin? You never know. I doubt it, but you never know. He could get hit in the head. And, oh my God, we should buy Solana. And like I said, I doubt it, but you never know. So let's end this back on what happened on Friday. You got a guy that opens a massive short 30 minutes before Trump made an announcement that was sure, 100% guaranteed to send the stock market and all the rest of everything spiraling downwards. Does that sound like it was a mere coincidence to you? No. And here's the thing. Am I saying that it is clearly a Trump insider? I don't know. I'm not saying that. B, I'm not saying that because I don't know. I'm not there. I don't know any of these people personally. I don't hang out with them. I don't shake hands with them. I don't drink beer with them. I don't live in Washington, D.C., so I don't know any of these people. So therefore, for me to conjecture on that would be wildly speculative as well as, well, unethical. But this is what we know. The short that was opened on Friday morning was $600 million. What does that preclude? Well, probably it precludes somebody like a staffer overhearing Trump maybe talking to one of his people, or one of Trump's people talking to another person saying, yeah, here in about 45 minutes, Trump's going to lower the boom on China. He's going to announce another tariff. It's not likely that a staffer or some, guy that's just kind of walking around within earshot or somehow or another gets that information second or third hand is going to have the ability to leverage $600 million on a short on freaking Hyperliquid. Okay, so there's that. So that takes care of a lot of the underlings and the possibility that somebody gathered this information out of earshot, which brings me to somebody who could open a $600 million short on Hyperliquid. And I was about to say I'm not going to name names because I don't even know where to begin. Some people are posting pictures of Bear and Trump. Doubtful, but okay, maybe. What I'm getting at is that I do believe that this is some kind of insider play. Now, was it on Trump's camp? Well, not necessarily, because people outside of Trump's camp may also somehow or another get information that Trump's about to make some kind of announcement that is going to send markets into a tailspin. So we don't know. But the chances of this being completely organic is probably 0. 30 minutes? Are you kidding me? So here's what will be very interesting in my opinion. Will somebody try to figure out who it was? And will they be successful in being able to prove it was that person? And if so, will we find out that that person is deeply connected into the inner chambers of Washington, D.C. policymakers and economists and administrators, the guys that are close to Trump or the upper echelons of the United States government? Because if we do, we got somebody should end up in prison for that one. And you got to remember that it wasn't just the crypto markets and Bitcoin that was affected. Everything got wasted. Energy, equities. I don't think the bonds had a very good day. Everything sold off. Agriculture was in the toilet. Everything was it was a Black Friday. I mean, it was like somebody is saying that in total, somewhere around $2 trillion with a T, $2 trillion of wealth was evaporated over the course of 4 hours. Because he made a post about putting tariffs back on China. Okay. And somebody 30 minutes before opens up a $600 million short on Bitcoin on Hyperliquid. I'm sorry, but I got to call bullshit. Somewhere there is an insider. And this person that opened that short knew something was about to happen and probably knew more than, quote, something was about to happen. Probably knew a lot more. And they made $192 million in that 4 hours as $2 trillion were being liquidated across all markets around the world. This also demonstrates the weakness of the markets, and not because it's not because the markets are weak because, I don't know, trading goes down or there's not enough throughput on the internet. That's not what I'm talking about. I'm not talking about infrastructure. I'm talking about structurally weak. And it also does not help that people around the world have almost no clue where to put their money. And this is the kind of crap that demonstrates just how deeply the idea of I don't know where to put my money to keep it safe runs throughout the world. Everybody is affected by the government's printing money because it's done the same damage everywhere in the world. Nobody is safe. Oh, well, it's just the United States printing money. Yeah, and that affects everybody. It affects Canada. It affects the countries that aren't printing their own money, which are few, if any. But even if those countries aren't printing as much of their own currency as the United States is printing of ours, and China's, not exactly not printing their money, it demonstrates just how powerful our decision-making over here is. And the fact that 2 or 3 sentences on a social media platform can evaporate $2 trillion of wealth in 4 hours should demonstrate just how structurally weak everything is. And the question remains, where do you put your money? I put my money in Bitcoin. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.